What I see, at least the founder traits I like to see, is if they have almost a tunnel vision of what they want to build and what they're focused on, narrowly focus on one topic, being an expert in that field. I think what helps is, for example, in the health field, is if they're, you could say, regulatory savvy, so they understand the regulatory field, because that's important. Also non-obvious is how malleable they are, how coachable the founders are. I always tell founders, and this may sound counterintuitive speaking for a VC fund, but if there's no need to fundraise, you don't have to fundraise. A lot of founders fundraise because they think it's the playbook. Not in all cases, I think it's necessary. 2026, I think as a founder, your head's down on creating the product, so you don't really have time to network and connect with others, but it's definitely crucial. Like a marriage, they have to align value-wise, mission-wise, personality-wise. It's not always about the biggest, shiniest VC fund or angel investors. It's more about alignment.
Yeah.
They have to look at a runway of at least 18 months longer than bio and healthcare, because the fundraising itself takes so long and it takes a lot of the efforts and time of the founder and founding team.
Throw your hands up if you with it, drop it.
Everyone, welcome to Explore Teenies with AI podcast. I'm super excited to have Filip Orth today with us, and he is the CIO for North American at Zaka VC, an early stage fund focused on funding technology that's literally shaping the future of health. So welcome to the show, Filip.
Thank you, Serena. Appreciate the invitation to the podcast. Glad to be here. Happy to be in venture capital. It's one of the most exciting industries. You get to see what's going on, but most importantly, what's going to happen in the future. And you get to shape it through investment decisions, advice, or connections. There's a lot of added value. This is a controversial topic because notoriously known that not a lot of VCs provide added value, or they provide negative value. A famous quote by Vinod Khosla, it's a high percentage. Nevertheless, I think a great industry to explore, and I'm glad because Silicon Valley is pretty much the birthplace of it, and it keeps on continuing growing.
You moved to Santa Clara University. What is it like to move from one country to be a student at Santa Clara University?
Yeah, pretty much. I decided to come to college to US. I wanted to study in the US. I didn't know exactly where, but Silicon Valley was up in the charts because the tech industry is exciting. Back then I knew about startups. I didn't know venture capital. I was open to it. There's a lot of cultural factors. There's a lot of, I think, innovation related factors that are very different. I think the mentality as well, but that's not only here specifically in Slovakia, but also just specifically as Europe in general, which is changing. When I got to Santa Clara, I wanted to explore a lot of industries, a lot of activities that were happening there as a first year. One of those things was I came across immediately was a competition in venture capital, and that's what gave me, I think, the best initial, you could say, kind of entry point to the industry on how it works. Obviously, it's not exactly like real life, but it was the closest to what it is for that time for me, who didn't know really anything or not much about venture capital.
That is so cool. So you found it by chance.
The story is pretty much, we would get these newsletters, and I was in the business school and of the Santa Clara University, and I got this weekly newsletter. And towards the end of the newsletter, as I was reading very briefly over it, at the end, like last, I think, paragraph of the newsletter was talking about this competition and that they're looking for people. It was the first time they done it undergrad. They've done MBA competition, but not undergrad. And they were essentially recruiting students for that competition. And it was like 1 month in, but I was like, let's try it. I don't know. So I went to the information session, and there were workshops and training sessions every Saturday, starting sometime before Thanksgiving up until February, when the competition actually happens. And those were super helpful for me to prepare. And we had a school round where people would qualify for the team. This was the process for the first edition. Ever since then, all my years at undergrad, I was able to compete, and it gave me always so much more experience, including internships. You know, you would come back second, third, especially my senior year. I had much more experience than my first year. It was much more rewarding to be in the competition.
Wow. I love it. Can't imagine being a student exposed to this world. Fascinating. Little Filip in college. So excited every day to venture capital. And you also found the Santa University Venture Capital Association.
We were discussing with one or two team members in our second year when we kind of were like deciding like, oh, what's going on? We should probably start as association because Santa Clara is in the middle of Silicon Valley, and we were thinking that it's missing in terms of the student organizations that we already have on campus. And so we created the COC association to promote the competition, but also try to bring some insights, connect to other industry professionals, internships, job offers, etc.
Oh, that's so cool. From doing all that fun stuff, at the University of Santa Clara, and to become a CIO for North America at Zaka VC, how do you shift to your current position?
Yeah, it's been a journey. During COVID, I decided to defer my studies. There was essentially the pandemic, and so I had the opportunity to have an internship at a fund that's based in US and also in Japan. And I did some work where I started off, sourcing deals. I was an analyst, and I progressed to being an associate, helping with memos, decisions, leading calls, having essentially a little bit more experience. And I worked also with a fund here back home, and essentially all this led to kind of learning more, like I mentioned, initial competition, going through internships, etc. When I got connected with the team at Zaka, I felt like there's good alignment because the team is based out of where I'm from. The team is from Slovakia, but the company thinks globally. I already had a footing in Silicon Valley. They felt that that's the great first step to kind of expand operations with boots on the ground in the hub of startups and venture capital. For me, it was continuing my passion and what I felt like I would be going back to at a certain point anyway. Plus, I would be working with a team from back home where I have roots. So it was a great fitting, I think. And at the same time, I already had experience because my role is a combination of supporting our portfolio companies, sourcing new companies from that region, and fundraising. With the CIO role now, it's essentially my focus shifts more towards that fundraising portion as we're gearing towards our fundraising of our second fund next year.
I'm so excited for that. Can you share a little bit about Zaka's, your portfolio, and what your thesis?
We invest in early stage startups as a VC fund, namely seed and pre-seed startups. We focus on two verticals mainly, or a couple of them, but essentially two main ones, and that's bio/healthcare, so biotech and health tech, and deep tech, specifically industrial tech and robotics. Those are the two verticals we focus on. We can deploy check fast. We don't lead investment rounds, so we can be a little bit faster on the due diligence. And we invest globally. The nice part is, compared to other funds that might be based in originally from Europe, we are fully private, so we are able to deploy capital internationally. And we mostly invest in Europe and US. Recently, it's been actually mostly US, North America in particular. And that's Bay Area, Boston, as that's a big biotech capital, New York, just to name a few. And we've been an active investor, for example, in Y Combinator. We have quite a few portfolio companies. We're still deploying from Fund 1, but gearing towards fundraising our second fund. We're fully active.
Oh, that's awesome. How does it work out for you shipping the ecosystem, both US and Europe? Can you share a little about your mentality going into investing from US only fund and global fund?
Yeah, it's a good question. We see all sorts of deals internationally. We do also have some investments internationally, also outside of Europe and US. I think there's some advantages to being here and there, and because of macroeconomic, geopolitics, and what's not, all these ecosystems are shifting and changing. What happens today might be different in a year on how startups respond to those shifts. But typically, often what we see also with the communication, and when I see the shift between the founders, because by the way, there's a lot of founders who are from the Central Eastern European region and they go to US either as their first step or a second step. They establish a company there, even though their roots are from Europe. So it's hard to define sometimes, like what's European, what's American, let's say, for example.
Sure.
A lot of cultural factors influence in Europe, for example, risk aversion. Thinking big, they like to address the TAM or SAM. What happens is they are very conservative, or they kind of look at only the countries around, and that's already the big problem because of Europe. Even though it's a big market, it's fragmented, so obviously you cannot take it the same way as US. The average spend tends to be lower. Different languages, cultures make it harder, but generally it's improving, especially when I look back home, when I see the founders, especially the new generation. I think they're looking much more outside of the borders, and they're looking at expanding or going directly into US, for example, as it's still the biggest market. It's not always the natural first step. We've seen that with healthcare companies where maybe FDAs might be done somewhere else because FDA was just overwhelmed and it took a long time, and they might have come to Europe or China. There's always alternatives. Those traits you look in a founder that are more important because you have exceptional founders from different countries that might not look like winners from the beginning.
Yeah, that is true, because I heard that, in Europe, there's a lot of kind of like support from the government. In the US is scale faster, right?
That is true. It's kind of a double-edged sword because, often, I don't want to call it free money, but oftentimes because of European government tends to kind of maybe not give it a independent kind of free flow or a less fair, you could say, system. It often can kind of come at a cost of the startups playing it safe. And that's the same from an investor side. There's a lot of investors that are playing it safe. They find all these kind of methods of protecting their investment through, documentation, which actually creates often a burden for other investors in further rounds. So it's kind of a paradox because you're in a startup field about risk and innovation, and so you have to be open to let that startup grow. And yeah, I don't think necessarily with money is the most important. Obviously, you need capital to start growing. But I think the more important is the advice and helping them scale and find that edge instead of providing capital at a cost of actually, I guess, minimizing the ambition of the founder or letting them take the risk.
Where do you see the most significant return on investment in healthcare today?
Healthcare with AI, I think it really depends, but for now, I think it's mainly in the operational administrative side. It's reducing costs and the burden with minimizing the regulatory friction. Then I think it could be, for example, clinical improvement because it grows with time. This can be, I would say, another one that there is. And then third one, which I think has a lot of potential, but long-term, it has a really long-term time horizon and risk, is kind of around the value creation around enterprise. So that's for drug discovery and R&D and such. These three have a lot of potential. It depends on the timelines. I can see it in the clinical stage and the drug discovery and R&D where AI should help. And we're starting to see that, especially focus on healthcare.
When you're investing in health tech companies, what is, one of the non-obvious traits that do you look into investing in AI healthcare space?
The traits of the founding team?
Yeah.
I think a lot of times, I'll mention the obvious ones: background, experience, and ideally some past rodeos in that sector. The best is if it was successful, but even if it's unsuccessful, they have something to rely on which they can improve in their second, third project because that increases their chances of survival and success. But I think what helps is, for example, in the health field, is if they're, you could say, regulatory savvy, so they understand the regulatory field because that's important, health related. I think it's good the way they work with customers. So in health, you can see kind of traction at later time. It doesn't show up right away immediately in the first day or weeks or months, like with other startups, like with SaaS or, for example, maybe agentic AI apps. You still need to work with the customers, especially for feedback, as you're constantly improving it for the best product market fit. And I think I guess they're obvious and also non-obvious is how malleable they are, how coachable the founders are. If you want to provide them good advice, I always tell founders also that not always any advice is good advice, but them being able to pick, choose, listen, and reflect on whether it can be helpful is important. So kind of like a humility, coachability side. And then obviously it's also, I think, and this is becoming more and more important nowadays, is kind of the way they treat the capital they have. So how much are they able to be not necessarily bootstrapping, but efficient with the capital they have, especially with the valuations we see today. You want to make sure they are efficient with the way they use the capital.
So yesterday I was at an AI event. So, they said AI investing 2025 is already kind of not going great. Kind of into 2026, what do you see investment in AI, especially in the health tech space?
I think we will see much more use of AI and agentic AI in healthcare. There's going to be groundbreaking discoveries, even though these are plays of 10 plus years, because exits don't really happen within 10 years in healthcare unless there's an M&A earlier because there's a potential for some success.
Definitely.
But I think there'll be a lot of intersection with AI, robotics, and bio. with humanoids. I think there's a good intersection between healthcare and robotics. We're all waiting for AGI, but that's probably down the line. It's an interesting question. There will have to be a lot of consolidation in terms of capital, and I think that's what might make it or break it for a lot of startups in this field, since it's so capital intensive.
It is.
I think that's what will clean up the market.
So there's some hope, for AI, especially in healthcare. The sales cycle takes so long to kind of like generate tractions or ARR. So do you have any kind of advice to help early stage founders in AI waiting for some tractions, maybe easily to get funding, or if there's like any resources to help early stage founders in health tech space?
Yeah, for sure. I think just as a preface, because I always tell founders, and this may sound counterintuitive speaking for a VC fund, but if there's no need to fundraise, you don't have to fundraise. A lot of founders fundraise because they think it's the playbook. Not in all cases, I think it's necessary. Like, I know founders who have great traction. Maybe it takes them a little bit longer. So that's something to consider, because capital gives you speed and mitigates the risk of a bigger fish putting you out of business. But I know founders who have 6-7-figure million, ARR in their businesses without a single, equity given to institutional investors. I think it's the typical channels. Sometimes VCs, sometimes too early, and I go to angels, family and friends. Often you have to, and this is where it comes to play on what's the background, right? Like if they've had past rodeos, if they can show expertise, what is their unique moat? I think this is going to be very critical with agentic AI. Now, there's a lot of talks about there being a lot of GPT wrappers. How can you show that you have a unique edge, whether it's through distribution, intern sales, unique data sets? It's essentially the information that you have in the background rather than almost the product itself or service. But I think 2026, when you ask, is going to be the year of that. In terms of resources that I would recommend is, I think as a founder, your head's down on creating the product, so you don't really have time to network and connect with others, but it's definitely crucial. And I think what's even more important, and this is a big difference that I see if we talk also about the Europe, a lot of founders strive for perfection and try to find the product market fit, but never release until it's perfect, which is a mistake because they never get the feedback from the actual user. And even once they launch it, it's either too late often, or it might not even have the right components because they never asked for feedback from the market. This is important. Learn and fail fast while pivoting and changing to survive. But you might dry up money if you're constantly thinking, especially now with AI, everything is progressing so fast that by the time they build it, it's already antique. And so you really have to think on what's more important. To your question, I think I jumped away. There's always the right channel of investments. It's not always a VC fund. It's not always that they have to go for the accelerator route. I think it's more important is how they align with the investor. It's like a marriage. They have to align value-wise, mission-wise, personality-wise. It's not always about the biggest, shiniest VC fund or angel investors. It's more about alignment.
Yeah, I love that you're sharing that. And, of course, in this ideal world is like you would be able to build something you love and have VC align. But entrepreneurship is hard and competitive. If they can find funding, of course they would want to jump in, especially if they've been trying to fundraise for a while. So when that time happens where you're desperate and then you have to get a fund, but you feel like it's not aligned, is there a way that you can protect yourself? That's number one. And number two, are you going to take the deal or, I have to find another investor?
It's a very fair question, and I should have mentioned it's easier said than done to find the aligned investor. If you're a first-time founder and maybe you don't fit in within those, which by the way, there's a lot of funds nowadays that kind of like go against the typical norm. We also like to look outside the box. And that doesn't necessarily mean they have a great academic background or they have to have all the biggest institutions. It's quite the opposite. You always want to look for the outliers, right? That's the whole idea. And those are the ones that tends to make it. And so to your question, I think it really depends on the situation. It's always about, whether the startup, let's say, if they're, that this is also why, by the way, when they're fundraising, they have to look at a runway of at least 18 months longer in bio and healthcare, because the fundraising itself takes so long, and it takes a lot of the efforts and time of the founder and founding team out of their busy days of working on the actual product and customers. You have to raise in advance a lot of your runway, plus you want to have a certain buffer zone because you never know what kind of new costs come in. But I think to balance out the aligned investor and money, again, depends on the, I think, situation. In case you're really, desperate for the money because the operation might cease, there's always options of kind of trying to bootstrap it or trying to look for certain programs that might help. If there are investors, you should consider those reference checks or asking current portfolio companies of that investor on what's their experience working with them. If it's a red flag investor, it will be detrimental to the startup and create problems because there's board seats involved, there's certain ownership rights, there's a lot of things that suddenly change the whole scope of how the company operates. There's another foreign entity coming in, and so there'll be a way. You'll find a way other than that, but this is only if it's a big red flag. Most investors try their best, but this is why reference checks are important, because sometimes over a 30-minute call, you might not be able to kind of get an idea of the person.
So even though you're desperate, hold it. Just due diligence, right? Yes. It's like you said, if it's a bad deal, it can kill the startup anyway. So there are chances that you're not going to make it, so why not find different alternative? And I love that you shared that you'll find a way. Yeah.
Exactly. That's one of the traits. It's fair to say the same way VC looks for a startup that aligns with their thesis, the same way the startup should look for an investor. And that's why it doesn't have to always be the biggest one with the biggest name. And that's not necessarily only for the purpose of popularity or in terms of capital. It's also because of sometimes that investor might be more excited. The investor B, investor C might be more invested in that business and provide more value. It's good for an investor to step in and help. Sometimes it's good to not handhold the founder because they should know what's best for the business. So it should be in tandem. It really should be in tandem. It should have goals aligned, have a clear understanding of what's the goal of the founder, whether it's what kind of exit, what do they expect, and be on constant communication. That doesn't mean on a daily basis, obviously, but have some sort of good relationship, formal and informal.
I love that you share that tips for VC as well. Yeah, because I just feel like because of the idea that the founder have is the vision, so I just feel like, of course, it's going to be like a lot like deeper the problem that they were trying to solve that they understand, and so I feel like VC probably deal with a lot of stuff, but like circumstances is always different. Be there, listen, and be supportive instead of like trying to kind of like lead or taking the wheel. So I love that you're sharing that. I was gonna ask, if you have a magic, what would be the best startup? Like, what would it look like?
What would it look like? It's a good question. I don't want to give a vague answer because it really depends on the sector. What I see, at least the founder traits I like to see, is if they have almost a tunnel vision of what they want to build and what they're focused on. That doesn't mean they don't have a holistic overview of the world and they don't, they're not well traveled or whatnot. That's also great to have because they need to understand the macro field of what it's exactly. It's the tunnel vision, narrowly focus on one topic, being an expert in that field. It doesn't mean they have to have 30 years experience. It could be a young person dedicated to that, reading books, articles, graphics since childhood or early age. They show a certain grit, and that doesn't mean they have to necessarily have, because it depends on the sector, they don't have to have a traction necessarily, some amazing traction. Because, by the way, we see that with AI, that even if there's great traction from the beginning and it's major numbers, that doesn't mean they'll survive in the next month, in the next year, because that's where the moat comes in, which is very tricky now with AI. So I think what helps also is their discipline on how much they're involved. Again, that doesn't mean they have to work constantly because often that comes at a cost of burning out, and that's also a very slippery slope. But I think they have a natural investment in the business. Another big one, and I think this is one of the most important traits of CEOs and the founders, is being able to attract top talent there is. Now, I know we're kind of entering the era of everyone waiting and expecting a unicorn with one solo founder, thanks to AI and ideally being a non-technical founder. Attracting key hires is crucial because it's never a one-person show. And there's talent all over the place globally, and Bay Area specifically. I think Bay Area has, if not the most talent per capita or per square footage in the world, then at least one of the best. And they should be able to attract the best talent there is. And that's where it shows their ability to sell the vision, explain where the company is going, confirming if they know where they are going as a platform or whatever it may be. Because with a startup, even if you pivot, that's fine, but you have to have a clear vision of what you're trying to do.
I love that. So number one is the 10,000 hours formula into whatever they love. They're trying to solve that problem. And number two is they have to have grit, right, to see how far they can take the company. And then number three is attracting talent. So those are the three things you're looking for in an ideal world of investing.
Exactly. It can interchange. There's a lot of other ones, some maybe obvious, but flexibility is the big one. You have to be able to adjust. You have to be malleable. You have to be constantly open to, and then again, being open to essentially being at the rock bottom, but next day you might make it big, even though it takes a while.
Yeah, it takes grits, lots of grits. I always say grits and grace. So that's my 2026.
Yes.
Just because grits is like you keep going, but it doesn't mean you're gonna kill yourself for it. Grace is like, it's okay if you need to stop, pause, rest, and then keep going. Don't beat yourself up. Startup world is like running a marathon, so you have to pace yourself. Thank you so much, Philip.
It's a good analogy. I agree.
Yeah.
Thank you as well.
Oh my God. Yeah, this has been amazing and very inspired, learning about your journey of how you get started into what you're doing now and making impact, investing in healthcare companies, robotic companies. That's amazing. Thank you so much. How can people find you?
Feel free to reach out to me. LinkedIn is the best. My name, Filip Orth, with an F. Feel free to message me.
Awesome. Thank you. Have a great day.
Thank you.
Bye.